Well, good afternoon, everyone. Thanks for joining us today. My name is Daouda Sembène, and I'm an economic advisor at the Office of the President of Senegal. And I have the privilege of facilitating this high-level online event organized by the Center for Global Development on Senegal's response to COVID-19. This timely event comes at a time when Senegal and other peers in the region and also across the world are currently coping with the impact of the pandemic. This event is going to give us a unique opportunity for policymakers and representatives from IFIs, academia, and think tanks to share their insights and experience on the crisis impact and also appropriate policy responses. But before we get started, allow me to introduce our distinguished panelists, starting with our host, Masood Ahmed. Masood Ahmed is the president of the Center for Global Development. He joined the center in January 2017, capping a 35-year career driving economic development policy initiatives relating to debt, aid effectiveness, trade, and global economic prospect at major international institutions, including the IMF, the World Bank, and the UK Department for International Development, DFID. Masood, welcome. We also have today with us Minister Amadou Hott. Amadou Hott is the Minister of Economy, Planning and Cooperation of Senegal. And he has been in this role since April 2019. Prior to that, he was Vice President at the African Development Bank, in charge of power, energy, green growth, and climate change complex, and that since 2016. Amadou was also chairman of Senegal New Airport, as well as founder and CEO of the country's sovereign wealth fund. Minister Hott, welcome. And needless to say that with you on the panel, we will have a very hot debate today.
Thank you.
We are also privileged to have Abe Selassie. Abe Selassie is the director of the African Department at the International Monetary Fund. And he has been in that position since 2016. In this capacity, Abe oversees the IMF operations and engagement with 45 countries across sub-Saharan Africa. Before taking his current position, he held various senior positions at the IMF, including Deputy Director in the African Department, Mission Chief for Portugal and South Africa, and the IMF Senior Resident Representative in Uganda. Welcome, my friend Abe.
Thank you, Dauda. Good to be here.
You're welcome. We also have today with us, and it's our honor to introduce Professor Nora Lustig, who is Samuel Stone Professor of Latin American Economics and the founding director of the Commitment to Equity Institute, CEQ, at Tulane University. She is also a non-resident senior fellow at the Brookings Institutions, at the Center for Global Development, and the Inter-American Dialogue. Professor Lustig served on the Atkinson Commission on Poverty, the high-level group on measuring economic performance and social progress, and the G20 Eminent Persons Group on Global Financial Governance. Welcome, Professor. Good to have you with us.
Pleasure to be here.
And finally, let me introduce Sanjeev Gupta. He's a Senior Policy Fellow at the Center for Global Development. Sanjeev is very well known for his widely published work on fiscal policy, public finance, inequality, and in developing countries. He has co-authored more than 150 papers and co-authored and edited more than 10 books. He was previously a senior official at the IMF, where he was the deputy director of the Fiscal Affairs Department. He also works in the African and European department of that institution. Welcome and good to have you with us, Sanjeev.
Thank you, Adam.
So, ladies and gentlemen in the audience, thanks for joining us. As you know, the COVID-19 pandemic is taking a huge human and economic toll around the world, in Africa and in Senegal in particular. Amadou Hott, who is the minister in charge of the economy of in the government of Senegal, you play a critical role in Senegal's response to COVID-19. So, my first question would be for you. And it would be great if you could tell us about how the pandemic has impacted on the Senegalese economy and what has been the government's response to the crisis induced by COVID-19.
Thank you very much, Dauda, and the Center for Global Development for having us this afternoon. Of course, Senegal has been hardly hit like many countries, like actually all the countries around the world. Before this crisis, our economy was growing very strongly, on average 6.5% per year for the last 5 years. Thanks to the Plan Sénégal Émergent spearheaded by President Macky Sall. With this crisis, we're expecting our growth to significantly go down this year. We do not expect to go into recession, but our growth will be close to 1.5% or so. And this is because of the slowdown on our exports. We export less because our partners are all impacted. We also have the lockdown, semi-lockdown measures, the emergency, state of emergency, the curfew measures, and all of that, the closing of restaurants, schools, and markets, and the informal sector also being hardly hit. All this has affected negatively our economy. But obviously, the tourism sector, which is completely down, the aviation sector, of course, like around the world. And very quickly, the president asked us to set up a committee that I'm chairing, which is the Comité de Croissance et de Veille Économique, which is the committee that's in charge of really thinking about the measures that we needed to take to tackle this pandemic. But at the same time, also, we set up a fund that were sort of with resources coming from our partners, coming from the budget, but also coming from the private sector that has responded massively to this fund. And basically what we decided, first of all, is to have the health plan to make sure that we have enough beds in the hospital, enough equipment, masks, and all the equipment and products that you need to make sure, first of all, we can cure the sick. Second, we can sort of do some prevention as well and monitor the contacts and all of that very quickly. That fund was about, that budget was about 100 million euros roughly for the health response very quickly. But then the economic impact has been very, very significant. And to face that impact, we had to take measures basically to support, let's say, the most vulnerable families in the country. About 1 million families, it's about 8 million people that received food items from the government to the tune of about 100 euros per family. We also provided money to our diaspora, which is affected around the world, in the US, in Europe in particular. People who are working overseas that are maybe in the informal sector as well, and that have been hardly hit, receive some money from the government. We also took fiscal measures to elevate the burden on companies that are affected by providing moratorium for tax payments, but also providing tax debt relief as well, and fast-tracking the payment of areas to the private sector so that we can have the trickle-down effect. But what we also did was that to set up a line of credit with the banking sector by providing some guarantees and providing some funding so that the commercial banks can lend at very low rates, 3.5% of interest rate instead of 10% or 12%, to provide the affected companies with liquidity that they need to pay salaries and face some of their fixed costs, basically. But also what we're working on now is really to work on the recovery. We are to focus on the key sectors that are very strategic for us going forward. And for the response, all in, we've put in about 7% of GDP, $1.6 billion for the quick response. But for the recovery, we're working with our partners to make sure that we have enough resources for the recovery. But for the quick response, we were really amazed by the response of some of our partners, in particular the IMF, with my friend here from with Abe, that has reacted very, very quickly. Within 3 weeks, we got an approval for $442 million. That was the fastest ever financing approval that I've seen in my career. And I wish actually that going forward also, even if there is no COVID, we can get this kind of fast-track response from all the partners, including the multilateral development banks. Of course, the World Bank, the African Development Bank, the EU, the French agency, the government of Germany, the European Investment Bank. Everybody really reacted very quickly. I've seen a reaction that I've never seen before, really. And my wish is, Semen, is that even after the crisis, I want all the multilateral development banks and IMF and everybody to work that fast, because Africa is always in a hurry, has to catch up, has to invest more faster than everybody. So let's make it the new norm even after the crisis. Thank you very much. Thank you.
Well, thank you very much, Minister. Thank you very much for this very comprehensive overview of Senegal's response to the crisis. You mentioned actually quite a number of fiscal measures that were taken by the government of Senegal in support for the most affected businesses and households. So maybe this is time for me to bring Sanjeev into the conversation. Sanjeev, as I said when I was introducing you, you were a very well-known expert on fiscal issues. You have worked actually quite a lot on Senegal itself, but also the region in general, while you work at the IMF. So, and you also published quite a number of very interesting studies on fiscal issues. So my question to you would be actually, how do you compare Senegal fiscal response with other countries inside and outside the region? You heard what Minister Hott has said that the government had done. What is your assessment, and how do you compare it with what you have seen elsewhere in the region, but beyond the region as well? We can hear you, Sanjeev. Can you look at your...
Oh, yes.
Okay, that's fine.
Yeah.
Okay, please.
So the what Minister described is a very, very comprehensive response from the government. And when you look at the cost of this response and you compare it with other countries in the region, you find that Senegal allocated a lot more resources than any other country in the region. So the numbers that I see, which have been published, is that Senegal spent roughly 7% of GDP in responding to this crisis. And when I start looking across countries such as Kenya, Nigeria, Ivory Coast, and even other countries in the region, there's nobody who comes close to that number in terms of response to the crisis. And Senegal did that despite the fact that its debt to GDP ratio is about 65%. So it managed to expand spending and cut taxes to be able to respond to this crisis. The reason why Senegal was able to do that is because it had, over a period of time, built capacity to spend. And that capacity to spend happened because it started to mobilize a lot more resources domestically. So if you look back over the last 15, 17 years, the tax to GDP ratio in Senegal has risen by over 3 percentage points, which makes Senegal as one of the star performers. So that allowed Senegal to respond to this crisis in the way it did. So clearly Senegal is on the path now, along with other partners, to embark on a medium-term revenue strategy to raise even more revenues. So this is a good thing. And how does it compare with other parts of the world? Largely, if you look at the numbers in both advanced and developing countries, you can see the amount of money that countries have spent has ranged between 1% of GDP and about 34% of GDP. And 34%, of course, is something which bigger countries did, Italy and Germany. And most of these measures were liquidity support to the businesses. And more measures are in the offing. So you will see with passage of time, countries are going to be putting in more measures. In the US, there's a discussion, as you see, that some more measures are going to be put in place. So basically, the ability to be able to spend has depended on the fiscal space, and Senegal was able to, use its space to be able to spend these resources, and the space arose from the fact that it had built up revenue-raising capacity. And so that is something which is a credible thing in the case of Senegal. Thank you.
Well, thank you very much, Sanjeev. Professor Nora Lustig, if I can have you in. I think you were recently on the news, actually, as you co-signed a joint call for a global agreement that would guarantee that when COVID-19 vaccines and treatment are available, that they would be provided free of charge to everyone and everywhere in the world. And actually, one of those global leaders that you co-signed this statement was our own president, His Excellency President Macky Sall. So that was recent, but you have long been on the news for your work, actually, on inequality, on social protections and economic development itself. So that's where I really want you to share your insight with us. How do you think that Senegal social protection program, as described by Minister Hott, the one that they put in place to mitigate the impact of COVID-19, how do you think those programs actually could help mitigate the impact of the pandemic? And in your view, how do they compare with those implemented in other regions? So maybe to remind you a few that Minister Hott talked about, that was the food programs that benefited the most affected households. There was also support for the diaspora, as well as the bill payment assistance, etc. So I would like to hear from you how you assess those programs.
Thank you, Daud. A pleasure and an honor to be in such a great panel. Thank you, CGD, for inviting me. And as you know, I'm not an expert on Africa, but I've been working more on Africa. And recently, as in the Institute, we increased the number of countries that we include in our fiscal incidence analysis. So I wanted to start, by the way, congratulating Senegal and many of the countries in sub-Saharan Africa for the response they have taken vis-a-vis COVID. I think that the rest of the world has a lot to learn from how effective there's been in terms of containment of the spread of the virus and also of the speed with which the responses to address issues on the macro and social protection front have taken place. And I wanted to emphasize that because it's caused me a lot of admiration now that I'm looking at the region, and Senegal is one of the countries I think belongs to the group that's doing really amazingly well in that respect. The second thing I wanted to say is the way I look at social protection strategies. Many years ago, I wrote a paper called Socially Responsible Macroeconomics, because I think that social protection in times of crisis starts by minimizing the macro effect. You need to contain as much as possible the decline in incomes in the country, because that's going to be the first thing that will help the poor across the board. And in that sense, what Sanjeev just emphasized, the fact that the fiscal package in Senegal is one of the highest, is highly commendable. I look at, if I compare with Latin America, the 7% to GDP is among the higher end of the Latin American response as well. So it is quite an effort to be made by a country which has got an average income which is much lower. The second thing about a social protection strategy that we need to think about, and there's going to be a tension between two aspects, is you want to protect losers, and you want to protect the poor from becoming poorer and the non-poor from becoming poor. The losers are not always poor, and I was going to show some slides, but that's going to take time. But we've been doing some work for Latin America, and we show, and also for Uganda, by the way, and we show that once you do the quantitative analysis of at-risk incomes, they run across the entire income distribution. So losers will be everywhere in terms of, lost income. And there may be an impossibility if you want to use resources to actually compensate everybody for the loss, not even for the 100%, even for some of the losses. So there may have to be a lexicographic ordering in terms of where you choose to put your money first. And I am a prioritarian, and I put a lot of emphasis on the poor. So one thing that I was thinking as I saw the type of policies that were being implemented, they're pretty similar to what we see in other countries. I mean, countries have homogeneously implemented similar policies. I have not heard much of whether your cash transfer program was expanded in coverage and average size. That would be a question I have. But cash transfers, food distribution, and subsidies to the consumption of electricity, water, have been the key ingredients of many of the programs that we see around the world, and particularly in Latin America. The question is, quantitatively, is it enough to compensate especially the very poor from becoming poorer? And I cannot assess that because, I mean, another question I had is Senegal's last household survey dates 2011. Be nice to see whether we have something coming sooner or update that in a way that we can assess the orders of magnitude of the response. And finally, one thing, then I'll come back to that later, that I think would be very important is when we look at the poor and the vulnerable, there's other non-income dimensions that we need to pay a lot of attention to. It's not just about transferring cash. We have, for example, issues of domestic violence that have increased a lot that can have long-lasting scars. And another problem which I've seen in Latin America and I see also happening in Senegal from the surveys that you shared with me is that access to education has been curtailed quite a bit, especially at the bottom, but not just there. And that's the kernel for increasing inequality in the future, and I'll come back to that in the next round. Thank you.
Well, thank you very much, Professor. I believe Minister Hodd will have an opportunity to come back to some of the questions that you asked regarding the surveys and others. But at this stage, I want actually to draw on what you and Sanjeev talked about to, have an idea about how the crisis impacted on the region and in Africa in general. And that's the opportunity for me to bring Abe Selassie in the discussion. Abe, I believe a week ago you published an op-ed in Project Syndicate where you actually identify the reason why, in your opinion, this pandemic could be such a threat for Sub-Saharan Africa. I guess this is based on your analysis, on the IMF analysis on the impact of this crisis on the region. So my question to you is, from your vantage point, how can you please elaborate on the economic impact of the pandemic on the region, Sub-Saharan Africa, and what do you think actually is the best or optimal policy response to the crisis?
Thank you, Dauda. Very good to be on this panel. Thank you for inviting me. I've been using this phrase that what the region has been hit by is a poisonous cocktail of shocks. So you've had the massive decline in external demand that all countries have been facing. I think a classic example here is tourism, which has basically come to a standstill. So countries like Mauritius, Seychelles being hammered, but even other ones like Kenya, Zambia. So, this decline really has been severe and has been impacting countries across the region. Added to this, of course, is the domestic demand suppression that governments have had to impose to the mitigation, confinement, containment measures that they've had to adopt in order to limit economic activity, to limit people, the crowding, social distancing, promote social distancing. That, of course, has a huge effect economically. And I would say our sense is that this effect is going to be quite asymmetric, impacting poorer households, the informal sector a lot more than, of course, the more formal economic activity. So this has been a second dimension of the shock. Third, of course, is that the decline in oil prices in particular. So for the oil exporting countries, this has been, really by far the most acute oil price decline that we've seen in many years. So they were already in a difficult situation. This has compounded the challenges that the region has faced. So really a poisonous cocktail. Any one of these shocks would have been enough to really cause difficulties for countries. What we're seeing is they're all coming together and impacting almost every country. Really impacting every country in sub-Saharan Africa and beyond. So the damage, the threat, is really as severe as we've seen anywhere. As a result, we estimate that growth will, as of the work we were doing towards the end of March, our expectation was that the decline in economic activity in the region would be of the order of 1.5%. But now it's likely to be even more because we've seen extension of the confinement measures in many countries and the recovery looking set to be slower. So a really very big hit for the region. The policy response, of course, as many have touched on, Minister Hott, Nora, Sanjeev have noted, is we've been encouraging and supporting countries' efforts to put people first, spend as much as needed on health. Without putting this pandemic behind you, without looking after people's health, you're not going to have an economy at all, right? So the first priority has been to throw whatever resources are needed to contain the spread of the disease and reverse it. So that's been really, really very important. Second, I think, is also given the potential asymmetric response, as I said, of the pandemic, but more generally, just because the poor don't have the resilience, don't have the resources to absorb an income hit, social protection programs have taken on an even bigger dimension, and so we've been supporting and advocating for governments to use existing programs, roll out quick and dirty programs to support people whose livelihoods are being threatened. So that's been a very important thing. The analogy I would draw here is the one that at the more micro level that Professor Lustig made, which is that in the same way that you want to cushion the impact on people's livelihoods. At the macro level also, it's very important that fiscal deficits are allowed to widen. You don't want to be adjusting in the middle of this crisis. And monetary policy has also to be very supportive. Now, a big challenge here, of course, is that countries don't have, unlike many advanced countries or even vast majority of EMs, the policy space that countries in the region have is much more limited. Domestic savings are limited, financial sectors are limited. So countries' ability to have the supportive stance is constrained by the availability of financing, which is why we have felt and have been calling for the need for really robust and external financing like we've never seen before to support the region. So you need both robust policy response domestically to as countries have been pursuing to contain the pandemic, to support people, but also that needs to be supported and facilitated by very, very strong external financing, which is, of course, why at the fund also we've been, rolling out support like we've never done before in support of the region and elsewhere. So I'll stop here, Dauda.
Well, thank you, Abi. Thank you very much. I think I retain that poisonous cocktail as you talked about, and certainly this is certainly not an understatement of the impact of the pandemic. So we have the opportunity to hear from the perspective of policymakers like Minister Hott, but also IFI officials like Abe and Professor Lustig and Sanjeev. We want to also understand what should be the response of the international community and how it should really help developing countries cope with the impact of crisis. And this is the moment that I was waiting for to have Masood in the conversation. Masood, in a previous life, I know that you were a World Bank Vice President in charge of poverty reduction and economic management. And in that capacity, you play a leading role in the HIPIC initiative. For those who, I guess everybody knows, but that's the highly indebted poor country initiative that was implemented by the World Bank and the IMF. So based on that experience and expertise that you have accumulated, but not only as a former World Bank official, but also, of course, as a president of CGD, you are dealing every day with these issues about how to improve the work of the global community in the developing countries. My question to you is, in your opinion, how best could the international community support COVID response in Senegal and other countries, not only in the region, but other comparable countries around the world? I guess that would be also an opportunity to hear from you about how you view the role that debt relief could play in that as part of the response of the international community for these countries.
Thank you very much, Dauda, first of all, for bringing us together. And also, I want to just add that amongst your many accomplishments, I don't want to forget that you're a non-resident fellow here also at the Center for Global Development, which we are very happy to have you as part of the group. And coming now to your question, and I really just want to pick up a few points that others have already made in different ways. And you asked what should be the international policy response and how does it stack up? And I think, look, as Abe said, I mean, this is the moment when the countries should be quickly and substantively providing resources to shore up incomes, to accelerate their work on a health response that is robust, spend money on that, and then to start helping the enterprises also, which otherwise, if they go bankrupt, some of them will never come back. So this is the moment to actually expand your macro support for them. And the difficulty is that most countries in Africa, low-income countries in general, don't have the resources to be able to do that. And that's why the international community has to come in quickly and in amounts that are responsive to the need. And part of that is debt relief. And I'll come to debt relief in 1 minute. But if you look at where we are today, I would say that the IMF, the MDBs have been quick out of the gate. They've tried to provide support quickly to many countries. But this is just the beginning. This is a crisis that is going to have a very long tail. And some of the points that were raised, whether it's tourism, whether it's remittances, they're not going to come back so quickly. Even if you see a little uptick in GDP next year from the big drop this year, it'll take much longer for people to go back to the tourism and remittances, supply chain restructuring. So this is a long shadow. And I think these institutions now need to be prepared to stretch their balance sheets. And my test is that, frankly, if at the end of this crisis, their balance sheets aren't feeling stretched and a little uncomfortable, they haven't done their job. They need to be worse off at the end of this process in a financial sense. On debt relief, look, it's important to separate out two things. One is many countries need immediate cash flow relief. And the cash flow relief is what was promised by the G20 in terms of having all the bilateral debt that was owed by the 75 or so poorest countries. There would be a standstill on that, at least through the end of this year. Now, I think the end of this year is a little bit unrealistic. It needs to stretch to at least the end of next year, but it's a start. Unfortunately, we are 5 or 6 weeks later, and I don't see that commitment is being translated into cash flow on the ground. Why? Because we are still unclear about what is included in there, which bilaterals. Some bilaterals are a bit still unclear. China in particular, I think there's some issues about some institutions in China, which are big lenders, whether they are or they're not part of this. There's also an issue of some countries on the receiving side being very hesitant to take advantage of this because they worry that if they do this, it will affect their market access. Although I would say to you that there are 30 countries in Africa that don't have market access. Frankly, for them, the downside isn't there even to worry about it. So I think the debt relief side on the bilaterals is still being worked through. And I think we need to push to get a faster implementation of it. And the other question on debt relief is the private sector. The private sector has issued some general statements saying, look, they want to help. But the bottom line so far is I haven't seen much in the nature of private sector actually doing any form of debt relief for the low-income countries. So we have to figure out whether and how that will come about. Has the voluntary approach to private debt actually run out of time? It's a question I think we should ask ourselves. And the last thing I would say to you on debt is that this is all about cash flow now. But we know that even as we came into this crisis, 40% of the low-income countries, the IMF did some work, 40% of the low-income countries already either were in debt distress or at high risk of debt distress, which meant that they were already at debt levels that were uncomfortably close to being unsustainable. Now, after a year and a half of going through this crisis, borrowing more money, spending more money, worse economic prospects, that 40% will be higher. We don't know how many countries, but my guess is it'll be closer to 2/3 rather than 40%. They will then need some kind of assessment of what is the sustainable amount of debt and what can be done to help bring their debt loads to that sustainable level. That's a much bigger HIPC-like issue, because there we are dealing with the stock of debt, not with the cash flow, but with dealing with the debt burden that they carry. And I think while now is not the time to have that focus, because right now we should be focused on providing cash flow relief and everybody needs to contribute to it, in 12 or 18 months' time, that will be the right time to have a discussion. And I just want to end by saying that it's very important that the worry about whether or not the debt is sustainable in 18 months should not become an impediment to providing support now. Because, otherwise you're shooting yourself in the foot. As I think Abe said that if you don't deal with the health problem, you won't have an economy. Well, I would also say to you that if you don't provide the support now, you can be sure that whatever level of debt you have now is going to be unsustainable because the economy will be in a shambles in 18 months. So let's focus on the immediate priority, make sure there's enough cash flow, and then let's be prepared to deal with the debt stock in 18 months. So let me stop with that.
Well, thank you very much, Masood. I see Minister Hott agreeing with you while you were talking about actually the importance for the international community to provide cash flow relief, but also extend the standstill that was proposed by the G20. And I would like actually to have Minister Hott back again with us and not only react on what Nora said earlier, and you, of course, Masood, but also actually my additional question to Minister Hott would be to tell us also what he expects from domestic and international partners in support of the efforts to mitigate the economic impact of COVID-19, those efforts that are being consented by the government of Senegal, and also what do you expect from those partners to achieve the government's long-term development goals?
Thank you very much, Dauda. I really must say that I agree fully with what Masood was saying. I mean, with the G20 decisions, we have a couple of issues. One issue is actually the conditions that are coming with, the moratorium that has been proposed. Some countries are not very comfortable, for example, forgetting about access to, let's say, commercial debt in the future, for example. Some of the conditions is there. But one thing that I think the G20 officials forgot to look at is, let's say, the existing contracts that we have, the existing funding agreements we have. When we looked at our agreements, requesting debt relief, for example, or requesting, let's say, a moratorium, might constitute an event of default if, for example, the existing lenders don't give you a waiver. And that's a major issue. And this is one of the reasons also why as Senegal, we've decided for now to not really take the moratorium that is proposed, especially knowing that moratorium has a smaller effect on our fiscal space. If you look at our bilateral debt, for example, maybe if we were to take the moratorium, we'll gain maybe about 26 billion CFA to 30, which is about $50 million only of extra fiscal space, right? We are battling with the deficit, the budget deficit, which has increased drastically like many other countries. Of course, debt to GDP has also increased. We've taken more loans to finance that deficit, of course. That's why we said for now, let's not take the debt moratorium. But but another initiative we want to support really is to provide maybe countries with more concessional money so that we can face financing the recovery.
Can you hear? I can hear you, Minister Hart.
Hello?
Oh, okay. Now I can hear you now. Yeah.
Yes. I don't know where you missed me, but what I was saying was that we decided to not take that moratorium for now because the impact on our fiscal space, additional fiscal space, is very small. But more importantly, the consequences on our other loan agreement with those clauses that make it a default if we don't get a waiver from actually those commercial lenders. And right now, we were negotiating some funding agreements, but that clause was there. So we decided to say, no, we're not going to sign it with that clause that says we cannot take debt relief, we cannot take the moratorium. If we do without a waiver, it's actually a default. And then a default becomes cross default, meaning all our international debt actually we are at default. So our hands are tied. Therefore, we are saying, since the multilateral development banks cannot give us all the budget support we need, as you know, at the World Bank, African Development Bank, you have limits on the amount of budget support that they can do every year as part of a percentage of the total funding they do to countries. And since they cannot do a lot of budget support, it's limited. Is it possible to create maybe an SPV, a vehicle that has guarantees from multilateral partners or like the EU or maybe some countries, to provide us with concessional financing so we can meet our commercial debt obligations instead of raising it again at a very high cost? Today, since the crisis, the spread on commercial debt of all African countries, minimum has increased by 400 basis points since March, 400 basis points. Where I borrowed before 30 years at 6%, if I go to the market today, I'll get 30 years, I'll have to pay 10%, which is something that is really 10 to 8%, which is too high for me. So can we provide more concessional financing, but also have a process to get back to norm that is long enough to allow the countries to come back to norms? From the budget deficit perspective, to cut it back to where we were before. It takes time. It's not in 1 year or 2 years. It might be more. The debt to GDP ratio, to bring it as well to where it should be, it takes time. How can we work together so that our countries don't suffer on that? Because the developed countries don't have that problem. I was reading the other day on FT that OECD countries will borrow $17 trillion to face the crisis. 17 trillion. Their average debt to GDP will go from 109% to 137%, which is a 28% increase. Can we get 5% of increase or even 10% of debt to GDP room, basically? And then we give us maybe 5 years to come back to norm. That would be fantastic. But if we don't, then even if there is concessional money available, we will not be able to take it. And this is faced by many ministers of finance that I've been talking to across Africa. And I think where we need some innovation, where we need some help from the IMF, from the other partners to say, okay, you increase your debt to DB ratio by maybe 10%, additional 10 points. We give you 5 years to come back to normal or whatever. Your budget deficit, you doubled it from 3% to 6%. That extra 3%, you have 5 years to come back to norm and not 2 years. Because otherwise, I'm going to have to cut on the expenses when the government needs to invest more, because the private investment will not come very quickly. It will take time for private investment to come. So government investment will have to be there for the next 3 years, very strong, so that we can have the growth that we want. And then last point on the issue actually of social safety nets, to answer to Professor's question, what we did was we extended the existing social safety nets. We had only 300,000 households. We moved it to 1 million households, and increased the amount as well that we offered in one go. This is for the food items, but also paying the bills is also about electricity bills, almost 1 million people as well. These are the lowest consumers. And some of them also, or most of them, have also benefited from the food items, and the 300,000 of them have also benefited the usual quarterly payments the government has been making for the last 6 to 7 years. So for some of them, it's really a good increase on their revenue. On the water as well, we paid the water bills of about 700,000 families. And I'm sure 300,000 of them already got also access to the classical safety nets that we had also in the system. Thank you very much.
Well, thank you very much, Minister. I think I'm going to pick up where you left about the social protection program that the government of Senegal put in place. And my question will be for Professor Lustig. You heard about all those programs that were implemented by the government and how they will help relieve the impact of vulnerable households. But there is a lot of evidence in the literature and actually recent evidence that the pandemic crisis is most likely to increase inequality and poverty, not only in Senegal, but in general. You, as an expert working on these issues, I would like to hear from you, actually, what's your view and how do you think, actually, this COVID-19 crisis will impact on poverty and inequality in countries, in developing countries?
Yes, thank you again. I think that, let me start by saying a few things in terms of the overall strategy again. Their response at the international level this time is, if it's crucial in many crises, this time is super crucial, and I'm so glad that everybody's working towards making it work. I hope it does. It sounds that it's been done in a very cumbersome way so far, and it needs to be fixed and fixed fast. The second thing is the macroeconomic response, which the minister and Abe have alluded to. And like I said, it seems that Senegal is really sort of on the high end in terms of being quite aggressive in putting resources into the economy to make the decline in economic activity. In fact, you're not going to have a contraction. And I have to say, coming from Latin America, I'm looking at you guys with envy. Because in Latin America, the projection is that on average, countries might have a contraction of about 5 to 6% of GDP. In Mexico, the forecast is maybe as big as 10%. So we're facing huge contractions. So some growth, it's quite amazing. I mean, 1.5% sounds like paradise when you come from my region. The third thing is the granularity that probably needs to be incorporated in your strategic response in order to curtail the impact on poverty and inequality in the long run. And in a paper that we recently wrote for the UNDP for Latin America with a colleague of mine, Mariano Tomasi in Argentina, we suggest that it might be very important for countries to put in place an entity that goes across ministries so that the response can be coordinated in the various fronts in which you need to coordinate it, to be coordinated. And let me focus here on your specific question about inequality. One of the factors that determines the evolution of inequality very prominently is the relative demand and relative supply of skilled versus unskilled labor. And I think what we're going to see probably is a result of the pandemic, the fact that people are noticing that you can actually use electronic devices much more than before and work working from home, etc., I think we're going to see an increase and acceleration in the labor-saving technologies in favor of technology-intensive technologies. So the demand for low-skilled labor may fall. But more importantly, what worries me right now is that we're going to probably see a resurgence of a relative scarcity of skilled labor, with the fact that now with the confinement policies, you're having people unable to continue schooling at the bottom end. So the progress that we were making in education, fast or slow, it's going to be derailed. And that is going to translate, for a fact, into a rising inequality in the future. That dynamic we studied a lot in the U.S., we studied it a lot in Latin America, and it's key to curtail it now. So one of the things that I would recommend very, very strongly is to deal with the fact that you have so many of the children, particularly in the lower end of the distribution, not continuing their education now. They may never go back to school, many of them, or when they go back to school, they may be permanently behind. So a focus on that should be utmost priority. Try to keep the human capital of your next generation as high as possible. And let me stop here.
Well, thank you very much, Professor. I fully agree with you on the importance of investing in human capital to especially the next generation, especially that we have a relatively young population in Senegal and Africa in general. So that would be important going forward. Sanjeev, coming back to you, I think we've been talking about what the international community can do at this stage. But of course, we have to also start by asking ourselves what we as country can do for ourselves in terms of mobilizing domestic resources to finance poverty reduction initiatives. So that's where I would like to get your view. You have worked a lot on resource mobilization strategies in Senegal and in Africa in general. My question to you is, what steps should the government of Senegal take to improve the efficiency of existing programs and strengthen revenue mobilization strategies going forward so as to deal with post-COVID challenges and generate resources for development and poverty reduction?
Thank you, Dauda. I think this is a very important issue. Of course, Senegal and other countries in Africa need external resources, but ultimately to have sustainable development, one would have to generate enough resources domestically. And what Abe described earlier, a few minutes ago, how the structure of the economies is changing in some of the countries, that is going to have major implications for generating revenues domestically. So that poses major challenges for the countries. With remittances down, with tourism down, structure of the economy is changing. The revenue ratios which were growing, they may not grow. And in fact, there could be a decline. So that can be a very serious development going forward. At the same time, I see this crisis giving countries major opportunities for reform. In the sense that here is a chance to introduce a very comprehensive policy package, which countries will accept now because there is a crisis. And in case of Senegal, to give you an example, there is huge amount of what we call tax concessions, which are given out. They cost roughly, the last estimate which was made in 2014 was that they cost about 7.8% of GDP. Of course, one could revisit those. Many of the policy changes were opposed by different groups, but now there is a chance to introduce the changes in the policies. There is also the issue of informal sector in Senegal not paying very many taxes. So one could now think of introducing some form of taxation, which Senegal has in mind. It's not something that it doesn't want to do. It's just that here is a chance to implement those changes. Then on the spending side, what is the point of collecting taxes if the money is not spent well? Because then you're just imposing tax on the people and not getting the bang out of the buck. So it's important that the money be spent well. But if you look at the spending programs in Senegal, I'll give you two examples. Education spending. Senegal spends one of the highest amounts in the region, roughly 6 to 8% of GDP, which is very high. But the outcomes are relatively poor. So clearly there is some scope for fixing that. Similarly, Senegal is one of the highest spenders in public investment. It spends roughly 9% of GDP, which is very high. It's good because you could see there was a growth going on along with it. But when you look at the assessments which have been done, including by the IMF, it shows that there's much scope for improving the efficiency of that spending. And similarly, Minister described the social program, which has been extended to a million families. One could ask the question, is this well targeted? If one looks at some of the programs which have existed in Senegal, such as agriculture subsidies and other kinds of social assistance, the studies which have been done by the bank have shown that they are not very well targeted. So there is a scope again to improve the quality of spending and generate resources to support COVID and post-COVID developments. Thank you.
Dauda, we don't hear you, huh? Dauda, we didn't hear you.
Oh, sorry, I forgot to unmute myself. Abe, I want to come back to you. I heard what you said about how unique this situation is, and we also very much read with a lot of interest your piece on Untitled Africa's Hours of Need, as you said, where you actually essentially made a plea for the more external financing for Africa. We also heard Minister Hott and others actually commending the IMF for the swift response to the crisis, how within a couple of weeks or 3 weeks, it was able to actually provide tens of African countries with emergency financing. Minister Hott said earlier, of course, we need resources now to mitigate the impact for the crisis mitigation phase. But there is certainly also another phase that is coming, and that would be essentially to promote economic resilience and the economic recovery. My question to you is, how do you think that the IMF could continue to support African policymakers' effort to mitigate the impact of COVID-19 and ensure that sustainable and inclusive economic recovery? And how do you see the crisis, the COVID-19 crisis, impacting Sub-Saharan African long-term prospects?
Thank you, Dauda. I think, first point I want to stress is, in terms of the role of the IMF in the global architecture, of course, we are the paramount institution in terms of coming to countries' aid when they're hit by shocks such as this. So, and we need to respond very quickly. That's exactly what we've sought to do over the last 7-8 weeks as this has been as the pandemic has been unfolding. Second point I would like to stress is we're not out of the woods yet. I think I worry a little bit. There's been a lot of discussion about the recovery. Yes, of course, we're doing some work to try and think about what work we're going to do in the recovery, but I think really very, very important that we have yet to put this behind us. So we've been thinking in terms of 3 stages, perhaps. I mean, I think the first stage is this phase of acute crisis when we have the threat of the disease continuing to spread. I think we're maybe, still there towards the end of it, perhaps. The lockdowns have ended, etc. But in many of our countries, we're seeing, community spread that is not completely contained, even if the numbers are not large. So I think we want to still focus on making sure that this thing is completely under control. And then I think there's this gray period a little bit where we'll be transitioning to recovery, but not quite. The disease, the pandemic is not fully behind us. I think we're going to need, vaccines and other health treatments to be fully behind and go back to, having economies that can go back 100%. So we're thinking through these three stages and how we can be of support to countries. Second point, external financing is very, very important. And that's a case I was trying to make in the piece that you stressed, that you mentioned, Dauda. But I think, we shouldn't underestimate countries' agency. At the end of the day, countries develop as a result, of course, of the measures that their government takes. So I think front and center has to be a robust recovery plan that countries have to develop. There's going to be a lot of uncertainty, but I think, in the same bold way in which countries have thrown effort, energy, resource at the pandemic, we need a similarly robust and country-specific plan going forward. I think Sanjeev has laid out very nicely quite a lot of things that countries can still do to create domestic fiscal space. I'm not saying this to minimize the need for external financing. I'm very, very cognizant that a lot of external financing is going to be needed to support countries going forward. But I think there are domestically also quite a few things that can be done to generate space so that a robust response can be provided domestically. So I think, I wouldn't underestimate the types of the measures that Sanjeev very nicely laid out. And then the third ingredient, I think, is going to be thinking about how to lay the foundations for a new economy. What are the opportunities that we can exploit, having learned from this pandemic? One example, digitalization. We've seen how, not just in terms of, ability for formal sector to continue doing its work, but really the ability of governments to provide even social protection using digital platforms in this crisis. We've seen in Rwanda, for example, they were very early on in terms of adopting e-government, in terms of, making sure that all of their local government offices were networked. So it's not surprising that we've seen very robust state capacity in countries like Rwanda and Senegal, of course. So I think, building on that, expanding on that will be very, very important. This is just to mention one. I mean, there surely are going to be a lot of different areas for countries to try and facilitate growth in. So taking hold of those opportunities to create more dynamism will be also very important. Some of it, of course, is going to be contingent on how global economic activity is going to be recovering. But I think, I just don't want to the point I want to stress is we recognize as an international institution how much support we need to provide, and will be doing so in the coming months. But domestic agency should not be underestimated, and ultimately our countries develop on account of what we do domestically, what our people do domestically. Okay. Thank you, Dauda.
Well understood, Abe. Thank you very much. Now I would like to save the best for last, of course, with Masood, before we complete this round of questions, and maybe take a couple of questions from the audience. Masood, I think there was a very interesting piece that you wrote a few weeks ago, where you were laying out what, in your opinion, is next for the in the international financial response to the COVID-19. Essentially, if I understood well, there was you were making the point that to set out an agenda for actions we needed to be mindful of the inconvenient realities. And you propose two-track agenda for actions, one being, of course, the immediate set of relief actions that needed to be taken now, and of course, what you call the systemic changes going forward. If I may, I would like to pick your brain on actually, if you could tell us a little bit about, in your view, going forward for the rest of the crisis, but beyond the crisis, in the post-COVID world, how should the global development finance agenda evolve to better fit these new realities and to be more to help better developing countries and low-income countries in particular address the daunting policy challenges they're facing in everyday life?
Thank you very much, Dada. I'll be very quick given the time. Look, the first thing I would say is that picking up on Abe's point that we're not through this phase yet. And while the IFIs have been very quick and I think quite responsive in coming around with the first round of support packages, it'll be more difficult for them to come back and provide a second round of support packages because of some of the internal constraints that were raised. I think the Minister Hott talked about there are limits about how much budget support MDBs can provide as a share of their total funding in a country. There are concerns that are about debt sustainability that the IMF traditionally very much takes into account in providing support. And I think that we will have to actually work with the institutions to try and put some of these concerns in abeyance for a while, not because they are not valid concerns, but because in the middle of a crisis, you have to accept that sometimes these concerns need to be put aside for a while. So that's kind of my first point. And that's a bit more uncomfortable for all of us. The second thing I would say is that I think we can lay out the forward-looking agenda, long-term agenda. And that's what I was trying to do in that piece. And it includes thinking about SDR allocation that would provide liquidity to many countries. I think it'll take a year to get that organized. It talked about what is the kind of development finance architecture that we have in mind. So, for example, we had been planning very much globally to have a big push of private finance for development, leveraged with official money which we call blended finance, to try and bring a lot of private money in. Well, going forward, will we still have the same appetite in the private sector for investing in countries as we do now, or will the risk aversion be higher? How should we use official money more effectively? And I would say, what size do you think the MDBs as a group should be? Collectively today, they have a balance sheet of about 550 billion. Well, during this crisis, they will probably expand their balance sheet by 150, 200 billion. After that, what happens? Do we say to them, thank you so much, goodbye, now you can try to bring down your balance sheets and stay where you are, so don't provide much more new money? Or will the needs of low-income countries over the next 5-7 years, as we try to move towards some set of goals that were set for 2030, probably have to be pushed back? Does that mean that we actually have a vision for a much larger development finance architecture, including a new business model for some of them, which may mean stretching and using their capital in a more creative way? So I think there are very big questions that need to be addressed in the aftermath of this crisis. And my purpose in laying them on two tracks was to say we should be cognizant that there are very big issues we need to get to, but to get there, we also need to deal with the immediate problem, because without that, it'll be hard to really focus on the longer term issues.
Yeah.
Thank you.
And I think what you're saying, it just remind me what Keynes used to say: in the long run, we will be all dead, right? What matters now is to find the solutions to today's problem, and we'll see tomorrow how it works out, although we need to still plan for tomorrow. So we essentially have 5 minutes to go through a few questions that we received from the audience, starting with the first one for Minister Hott. The first question is how the government of Senegal is coping with the disproportionate deprivation faced by people in informal segment of the economy in the face of lockdowns and curfew. I feel deep concern for these people and these populations, segment of the population. How targeted are the government's initiatives? So if you could maybe in 1 or 2 minutes give an answer, and then we'll go for a couple of other questions and close and wrap up. Thank you.
Yes, very quickly, first answer is to say that the 1 million families that have been targeted for the food stuff, we used the database that we had already with the help of our National Statistic Agency, with some of the partners, and then we worked with the mayors, the community, local communities, to add another 400, roughly 1,000 people. We already had a database of almost 600,000, right? And most of those people also are working in the informal sector, right? So they are affected by the lockdowns, but they get the food items, the 100 euros that we provided, but also paying the bills. So they are mostly the people who are also benefiting from that. We need to do some studies to precise that, but it's absolutely the case. So this is one. Number two, some of the financing mechanisms that we have are targeted to the informal sector, like FONGIP, providing guarantees to microfinance institutions to lend money at 8% instead of 25%. That's a very big thing. DARE, which is one of the agencies in charge of lending money to women and to the youth as well, has given moratoriums, has given extended finance to many sectors of the economy. But also, some sectors have gotten cash from the government, like the informal transport sector. We provided money to those sectors as well because their revenue was reduced because of the restrictions on number of passengers you can have, for example, on a taxi, and so you had some loss of revenue. So we provided actually to replace a bit those loss of revenue. But I'm sure there is room to improve, to do better in the future with the help of the statistic agency, with the help of the partners to have a more targeted database, to have the crossing it between those we are helping on food stamp and those that are in the informal sector, to cross-reference everything so that we can have a more comprehensive database. Thank you.
Thank you very much. One question that I would like to ask to Bob and Masood, 1 minute each. So the question goes like this. While recognizing the responses and the need for additional resources, I am wondering how viable and sustainable is this external funding options for Africa as it comes with the increased debt and a higher dependency to external partners. So what are the additional measures to implement to turn this additional support into more productive and more effective investment and policies? Abe, 1 minute, if possible.
Thank you, Dauda. So, as Sanjeev very nicely laid out earlier, at the end of the day, the most sustainable and durable form of financing our countries is of course domestic revenue, and that's what countries need to work on. At the same time, as we know in our countries, it takes quite a lot of time to develop the ability to capture the rate of return on all of the investments that our countries make in health and in education, but also infrastructure. So external financing can be a bridge until countries get up to speed in terms of getting revenues to a reasonable level. So it is indeed a transitory financing scheme. And that's very much also, of course, how resources like those from the IMF are provided.
Thank you, Abe. Masood, one last word, if you may,
yes.
React to this.
Just one sentence, really, which is the key, as Abe and others have said, is going to be in raising domestic savings and domestic revenues to finance growth and development. It's never easy to raise taxes, not popular. But the two things that are going to be particularly important, in my view, is a sense of fairness in the way in which the money is being raised and the money is being spent, and transparency to be able to show to people what is being done with the money that they spend. In many, many countries, you find that people are not willing to give money because they don't trust how the money is being spent, or they don't see how the money is being spent. So I think fairness and transparency are two things that would help to make it more feasible to undertake the kinds of domestic revenue mobilization that will be needed.
Dauda, may I say one thing?
Yes, Nora, please.
I'm sorry, but I have to say this. One thing that we have discovered in all the work that we have done in the Commitment to Equity Institute is a danger that I want to raise now. Domestic resource mobilization, emphasizing it too much in low-income countries, can hurt the poor through primarily consumption taxes. And I think that we have to be careful to ask countries that are at development level that it's still low-income countries. And if we look at when countries that are today developed had the same income level, the amount that was raised was much lower. So let's be careful that we don't take away with one hand what we give with the other, because then we're going to be in a bad place. Just want to say that.
Just one thing.
Thank you very much. Yes, Minister.
Just one thing for my conclusion. You're really in line with what Masood has said, is to put between brackets for now many of the rules that we had before, some of the constraints, for the next, to allow the countries to recover and go beyond this situation. The danger is to try very quickly, very shortly, to come back to some of those agreements that we had. That will really hurt the poor, that would hold the economies. In terms of debt to GDP ratios, in terms of the fiscal deficit, we need time really, and anything that the international community can do to put on hold, I think that will be very helpful. But meanwhile, we'll push to be more efficient on our debt spend, on our expenses, on our debt spending, on everything else. But we need that time. Thank you.
I think this is a very good way of wrapping up this discussion. I certainly would derive two key takeaways here. Of course, there would be a need for countries to boost domestic revenue mobilization to make sure that, of course, they free enough resources to fight the pandemic. But at the same time, they certainly would need additional external financing, which they would need to, of course, get and to benefit. Needs to come with additional reforms that the country needs also to implement. And certainly this is already the case in many countries in the region, in Senegal in particular. One last issue, or one last thing I would say is there is some shared responsibilities in responding to the crisis from not only policymakers, domestic and external stakeholders, and the international community at large. We certainly all need to work hands in hand to collaboratively to mitigate the impact of COVID-19 and also achieve sustainable and inclusive recovery. So with that, I would like to thank our distinguished panelists for joining us today, and also thank the audience, and special mention to the Center for Global Development for organizing and hosting this event. So before closing, I would just ask everyone, even if we cannot see them, to give a round of applause to our host. And I thank you again very much, and this meeting is adjourned. Enjoy the rest of your week.
Great moderation. Thank you very much.